My job, the good news is you are at the first step of building an ADU, because contractors, designers need to know, what is your budget? What are we designing to? What can you afford? And that kind of thing. You don't want to be building a champagne castle on a beer budget. And what you'll find is that all of the steps fall into place once you do this first step. And so there we go. Bottom line, what does an ADU cost? What am I seeing? Now, I am no contractor, but I see construction bids across my desk all day long. An attached garage is typically your highest return on investment. Those are typically used as a junior ADU. And across the state, if a house is owner occupied, you can build an ADU and a junior ADU. Junior ADUs can only be 500 square feet, and they must be a conversion of existing living space. So typically people convert the garage and then they get it permitted as a junior ADU. Now, having said that, as a mortgage lender, I can only, in most cases, I can only permit one ADU or cover one ADU, but I can cover room additions and all kinds of other stuff. So there's some little sidestepping that's a little bit different. A detached ADU, which is what most people are building, can be up to 1,200 square feet, which I typically see a 3-bedroom on that. And those go on average about $300,000. But the bottom line is, for every $100,000 you spend, it's about $500 a month. So you can build a 3-bedroom, 1,200 square feet ADU/house for about $1,500 per month. And we're going to go over rents. These are San Diego County rents. Rents went up 46% this year in San Diego County and went up considerably everywhere else. So how do you know what your rent is going to be? And the answer to that is, I personally like going on Zillow as opposed to any Rent-A-Meter and some of the others. And the reason why is that ADUs are a different beast than your standard apartments and so on. So I go on Zillow, I select rent in the zip code, and I filter out apartments. I choose the specific number of bedrooms, and I look at kind of what is the average. I know, I hate Zillow too, but the truth is it's your best thing. And this is really an important step because it helps you optimize for your design, right? If your goal is to rent this, sometimes people think, oh, I have to build this huge ADU in the back. Not necessarily. City of San Diego allows, technically speaking, unlimited ADUs in their backyard, in the backyards of single-family homes. Now, there's a trick to that. We'll talk about that. But I'm seeing, and they also allow junior ADUs to be attached to the ADU itself. Other cities don't allow that. But what that means is that instead of building a big 3-bedroom, you might have a better rent if you build 2 1-bedroom units. So essentially a 1-bedroom ADU duplex. So if you go back to this rent or this slide, why would you build one for $2,200 or build one for $3,800? Instead, you can build 2 1-bedrooms and now you're cash flowing $4,400. So this is where optimizing your design for rent in your neighborhood really matters. And in places like National City and other neighborhoods, I find that sometimes the prices for a single family ADU versus a 2-bedroom ADU is actually about the same. So why build that big? So things to think about. So I want you to go through this understanding that loans are tools. You got a paintbrush, a hammer, and a screwdriver, and you would never use them for different things. Construction is a riskier loan. So even though many of our construction loans and renovation loans are a Fannie Mae 30-year fixed, the truth is they're a little bit higher. So we offer a complimentary rate and term refinance into that long-term stabilization loan. That's your 30-year low rate fixed mortgage. But now that we have inflation, it's hard to get that low rate. So we've seen the rise of what I call cash flow loans. So we're seeing things like interest-only HELOCs or things like that that allow you to cash flow on a project and maintain a reasonable budget until we get to the other side of inflation. Rates are going to drop right back down in about 18 to 24 months. And when that happens, again, we offer that complimentary rate and term refinance into that long-term stabilization loan. So you've got a short-term construction loan, you've got your medium-term cash flow loan to make sure that your cash flow is working, and then ultimately we'll get you into the long-term stabilization loan. And those, once you do the first loan with us, the refinances are free. So, and it shows you the risk is related to the interest rate. The higher the risk, the higher the interest rate. And so these are kind of some of the options that are our go-tos, but we've got more than 400 loan options to solve a lot of problems. And we talked about that lifetime guarantee. Again, inflation will be over in 18 to 24 months. By the way, there is a new loan product out there. So if you use a home equity line of credit and you want to pay it off when you're done, we can cash, normally we can only cash out up to 85% of loan to value, but if there's an ADU involved and you're paying off the loan to build the ADU, we can cash out up to 95% to pay off that HELOC. That's actually a Fannie Mae loan. So the question is, how do you, what do you use to pay for it? You can use cash, certainly, but most people don't have that kind of cash. So we're typically, and my concern with inflation is cash is king. You're going to need cash to get through inflation. So then you have the option of the cash out refinance if you have equity, and not everybody has equity. So, and that's the big question. Cash out refinances, when you factor in the mortgage interest deduction, it's about 3% with the net cost of borrowing. And with the home equity lines of credit or a home equity loan, we can go up to 97.5% of current appraised value, interest only, or we can do a fixed rate and a fixed second mortgage. And both of those are really quite valuable. Again, it's about $500 for every 100,000 you borrow, maybe a little bit more on the second mortgages, but it's still really worth it. And when you start to, you can start to see the monthly payments on what they can look like. The home equity lines of credit are kind of a worst case scenario here. So if you have a low credit score and you're maxing out your loan to value, you're going to have a higher rate. But if you have a lot of equity and you've got a great credit score, I'm seeing as low as 4.99% interest only on the home equity lines of credit. And that's about $1,250 a month for a $300,000 budget. So how do you know if you have equity? Well, generally speaking, the max loan to value on the cash outs is 80% loan to value. And it's up to 97.5 on the home equity line of credit. It's up to 90% on the home equity loan. So this is an example of a house that's worth about $700,000, and it has a lot of equity, but unfortunately, we can only cash out 80%, up to 80% loan to value. So that only gives about $110,000 available. And you can do this math yourself by simply doing this calculation to figure out what your max cash available or cash out available would be to finance your ADU. But let's say that's not enough money. This is, by the way, we can do a home equity conversion mortgage. So if you're 62 or older, you can cash out of your house using a home equity conversion mortgage. You may not even need to make mortgage payments. And then if you choose, when the ADU is complete, we can refinance you back to a forward mortgage, a standard 30-year fixed if you choose. So there are options for seniors who don't have a lot of income, but you've got great equity in your house. What happens if you have no equity? Well, this is where you go into renovation lending. And I'll be frank with you, most banks and lenders don't do these because they're tough loans. It's easier to tell you that you're not qualified than to refer you to somebody who does these types of loans. But the fact that it's a tough loan is my problem, not yours. It's a ton of paperwork. Basically what we do is we send the appraiser out and he says, oh, I see what you're going to build. Based on this, instead of your house being worth $700,000, it's going to be worth $950,000. Now, we don't usually get on this initial run a full value. Almost inevitably, when they come back after they're built, they say, oh my gosh, that's so much bigger, it's so much better. And then at that point, we get dollar for dollar value. Now, Mark, this is where I'm really grateful for your question. When we started appraisers, the appraisal guidelines are very strange. So sometimes I've seen appraisers who aren't trained on ADUs give a 1,200 square foot, 3-bedroom house a $0 appraisal. Why? Because ADUs are treated differently than rental property. They can be an ADU in mortgage terms can be a pool house, a shed, something that's not usually rented, and those loan guidelines have not changed. But we did partner up 3 years ago with the Appraisal Institute, and we're the only bank out there that has a renovation sub-panel with trained appraisers. So we are typically getting on the initial construction phase about 75% of the construction value, and when it's done, we tend to get full value. And that's true not only on our construction loans, but on our rate and term refinances. I have a number of clients who built ADUs and can't find a bank that has appraisers that know what they're doing with ADUs, and they're not getting the full value. Anyway, renovation lending based on future appraised value. So when you do the math, you get a very different value. This is the previous example with using cash out, where we can only get 110% cash out. But I can lend up to actually 110% of future value in some cases when the ADU is attached to the primary house. If it's detached, I can only lend up to 95% of future value. And look how much cash is now available when we take this approach, a lot more. What's different about renovation loans is a HUD inspector. So my HUD inspector, Fannie Mae requires us to make absolutely sure that this gets built and gets built right. So Fannie Mae requires us to use an independent third-party HUD inspector he's the one who oversees construction, and he's the one who authorizes the bank to pay the contractor as the work goes. And that is an incredible value to the homeowner in making sure that the contractor that they're getting their money's worth, the contractor is doing a job that's permittable, and so on and so forth. I have clients who actually can hire the HUD consultant privately to help them if they're concerned about how their contractor is behaving. The bank also we also vet the contractors. We look at their finances, their legal situation, their licenses, their insurance. So we have people who professionally vet our contractors to make sure the work gets done. And this is why it's so important to me as a lender that I surround myself with a trusted group of contractors who actually get the job done. As you can tell, all of this is simultaneous, even if you are purchasing a home. And I have a group of ADU investors, often first-time home buyers, whose goal is to buy a single-family home, add an ADU, a JADU, and then do the same thing next year. It's a great way for young people to get started and buy a home that pays for itself, just like a duplex or a triplex would. So, but you want to start this finance process first so you know what budget you're designing for. When you submit for permits, then you select your contractors, because you need the design to get a real construction bid. Otherwise, the contractor is guessing, and sometimes they won't even give you a construction bid. When you submit for permits, if you're doing a renovation loan, that's when we start the process, because while we're waiting for permits, we're going to work on the loan. But the goal is to, certainly the goal is to have your money ready to go when three things happen. Number one, your permits are back and they need to be paid. That's when the biggest chunk of change on the permits is charged. But that also means your contractors are ready to go and they need to go buy materials. And number three, we're gonna do it at the beginning of any given month. When we fund a loan at the beginning of any given month, you have no payments for 2 months. And that can really help stretch your budget as you go into construction. Typically, I see construction take about 6 months. And then you do need to make 6 payments, and then we'll give you that complimentary rate and term refinance. While you're at it, you might want to consider renovations on your house, deferred maintenance, that kind of thing. If you're going to have contractors stomping around your yard and you're doing this big loan, so why not fix, the things you need to fix? Also, one of the tips and tricks I personally really like is adding solar to the whole house. And then you include the cost of utilities as part of your rent. You increase the rent. So now your renter is paying for your utilities. It's kind of a fun one. I have a client that went out and bought an electric vehicle and is joking that his renter's paying his gas too. There, for owner-occupied homes, there is an ADU grant with the California Housing Finance Authority. Now, right now, not one person has gotten a dime of that money, but I am on their working group, and we have proposed a phase 2 that would really, really open up the grant to everybody. So more details will be available on that in mid-July. We just have to pitch their board meeting for that. So, and then we will know. But bottom line is what's going to happen with that grant is you're going to do your cash out or your home equity loan, and then you're going to put that cash in escrow with a nonprofit agency, and they will oversee the construction just like the renovation loan. In fact, they are using my HUD consultants in many cases to oversee that. So you get oversight for these families to protect them from predatory contractors. Now, ADUs for family. Unfortunately, so let's say you're looking to put an ADU on your property for your adult kids, and that is a great idea. My husband and I have 6 kids. I can't wait for grandkids. He thinks I'm nuts, but I want to have those grandkids nearby. Unfortunately, there's no standalone ADU loans per se. It's always a loan tied to the house. I suspect that there will be land lease ADU loans coming up. But in the meantime, what I typically do for multi-generational families is title it so you go on the mortgage together, but it's titled as tenants in common. And that allows the parents to continue to own all of the land and the primary house, and then their heirs can get their inheritance equally. The kids only own the ADU portion of the house. And my recommendation is if you're doing this, like let's say your kids are 21 or 25, single still, build big. Before you know it, they will be married and having kids, and you want to entice them to keep the grandkids close. Just food for thought. So tips and tricks on this. Run the numbers first. I can't stress that enough. And then, design to what you can afford and what you're optimizing in. I can refer you contractors that I really know, like, and trust. The other reason why you want to get pre-qualified first, even if we're just having a conversation, is that I'm not, with my renovation loans, I'm not allowed to consider future rental income from the ADU. So that's something to think about. Stick-built versus prefab and modular. I am seeing amazing new prefab and modular options out there. This whole ADU movement has begged the question, why do we build with lumber? And we're starting to see ADUs being 3D printed in one day. It's just amazing to watch out. So, but every situation is different, and I can, again, help guide you to the right type of contractor. Generally speaking, I'm finding now that the modular homes are a little bit less, but not by much, and they don't allow a lot of customization. So it really depends on what you're doing. Don't run out of cash. It is the black hole of lending. And the only thing, if you get stuck in the middle of a half-built project, The only thing lending I can do is hard money, and that is expensive. But most important, beware of low bids. I've given you the numbers. If you're having contractors who can say they can build a 3-bedroom ADU for $100,000, just run the other way, because that simply doesn't exist. If you're looking to become an ADU investor, you're looking to buy a house or properties that are ADU friendly, there is a sweet spot, and that is building within the federal loan limits. In San Diego County, the loan limit is $879,000. In LA and Orange County in the Bay Area, it's $974,000. And we can run these numbers, but basically you can buy a property for about $650,000, $700,000, as low as 5% down payment. I've done it with 3% down payment. And that leaves you plenty of room for a construction budget. $262,000 in this example could get you a garage conversion and a small backyard ADU. There should be no reason. And if you think that these properties don't exist, let me show you that one. That is a classic example of an ADU friendly property. And what you're looking at here is this huge 2-car garage. Now, why do I like the attached garages? And the answer to that is, when a garage is attached to a house, that means that it's got the same roofing and it's got the same trusses and probably the same foundation as the primary home. And that means you're going to pay far less in demolition and things like that to rebuild it to residential codes. This roof is probably built to residential codes. I'm not sure about this foundation. And then of course you have this massive backyard, which is perfectly suited for an ADU. And Nicole, you're welcome to ask your question in just a second, or I'm almost done here. If you're looking at duplexes, this is one that's actually on the market right now. And look at this massive backyard. So in theory, and if you can find something zoned up to R4, in theory, you could, if it's zoned R4, you could add 2 additional units and technically 2 additional ADUs. Ultimately, everybody's going to start building up, but with a duplex, you can go down at as low as 10% down, and this would give you construction ability $474,000. So if you look at monthly payments here, $6,754, but your monthly rent is incredible, and that rent is only going to go up. Bottom line is, you should have a spreadsheet like this, and you should know your numbers. So when you talk with me, this is just somebody's example. When we talk with me, you will know all of these numbers. And the best way to do that is to book time with me one-on-one on my calendar. And you will walk away with those numbers, potentially some referrals, and the confidence to move forward with that. That's all I've got. What questions can I answer? And feel free to unmute yourself.
I just had a quick question. There was a slide that had talked about 6 months of uninhabitable. My guess is that's build time, right?
Yes. So if the primary house is unlivable during construction, we basically take out a little bit extra on the loan to pay your mortgage during construction so you can live somewhere else.
Cool. Thank you. We wanted to know that trick. I appreciate it.
Yeah, you bet. That can save a marriage. What other questions, guys? Rosie, I hope this helps you see where your clients may be having some challenges. And so if you have, I've got a number of great contractors down in National City. I'd be happy. Any questions for me on that?
I'm actually on your Calendly right now. I'm gonna schedule something with you because yes, I have a lot.
No problem. I'm glad to see Christina Rhodes on here. Christina Rhodes is a property manager in San Diego County. Hi, Christina, and a friend. But her investors are also building ADUs, I think, on their property, and I'm hoping to do more with you. What other questions, guys, can I answer?
I have 2 more. So there was another thing that you had talked about in an unlimited number of ADUs on a property?
Yes.
Okay.
So,
Like, so
the city of San Diego has something called an ADU bonus program, and other cities are looking at adopting this. Notably, the city of Los Angeles, it's rumored to be. Other cities have different programs, so every city is very different. City of San Jose allows 2 ADUs in backyards, all kinds of different things. So that's why it's so important to work with an ADU contractor who knows the city and what you can do and what you can't do, because that makes a huge difference in optimizing everything and getting permits through. That's the difference between a permit getting through in 2 months versus 8 or 9 or 12 months. Work with an ADU specialist. So the ADU bonus program, City of San Diego allows unlimited ADUs up to the setback line on a single family home. The caveat is that for every the first ADU has to be leaned for 15 years as low to moderate income. Now, what was moderate income is the key word here. What was the moderate income rent max last year? $2,600. Well, shoot, that's what we're charging anyway. So, or, in high-end neighborhoods. So it's very affordable. Typically, those projects look like a 6 to 8 unit apartment rental. Now, this is one of the important things. I can't finance that through a traditional owner-occupied home. Right now, I can only finance that through an investor loan, but it's actually a really great loan. It's interest only during the for both the construction phase, and actually I've got a refinance option that's also interest only. I personally just did that on one of my investment properties, and I'm at 4.99% interest only until we get the rates back down. What other questions, Nicole?
Oh, I did have one more. I apologize. Working with the county, a lot of people want to avoid it like the plague, right? So just a question with experience maybe on the panel, anyone dealing with the county, and are we seeing improved timelines, improved communication, improved things going on in the ADU world, or are we still in the nightmare of what we have been going through the past couple of years?
So I'm hearing the county is getting better. The issue with the city and the county is the lack of staff. A ton of staff left both the city and the county. And so there's backup. But what's really critical, and this goes back to working with great designers. So for example, I happen to know that Rulin Design Group is the city of San Diego just told them proactively, because they like them so much, that they have more ADUs permitted in the city of San Diego than any other contractor or design group. And so when Chris and Audrey walk up to the counter, it's like, oh yeah, this is, you did this one on Main Street, right? Yeah, okay, good, we're good to go. So you see much faster turn times, and because of the rapport and the credibility that Rulin Design Group has had, and there's others like them.